Ladies and gentlemen, welcome back to TLT Talks. We've got an exciting show for you today with a very exciting guest. Who here loves Texas? Woo, Texas! Maybe nobody ever. Maybe nobody ever. So with us today, S Corp taxes are due on 4/15, just about a month away. And so, Gulp, what do we do here? I have with me today a dear friend, my personal accountant, and I think, talk about crushing a company name, ladies and gentlemen, the founder and CEO of OG Accounting. Yep, you heard it correct.
Hey Eugene, how's it going?
OG Accounting in the house. What's up, Oleg? How are you?
How are you, man? Good to see you. Good to see you. Can you hear me okay?
Yeah, I hear you perfect. I hear you perfect. All right,
Awesome,
my man.
awesome.
Well, why don't you tell the folks that don't know you? I mean, I know how brilliant you are. Thank you for all you do for me and my family, my work family, and my personal family. Why don't you tell folks who you are, where you're from, how a OG accounting came to be?
Yeah, absolutely, absolutely. Yeah, I mean, we're a small CPA firm based out of Brooklyn. We opened up our company maybe 15 years ago or so, we service 2,000 plus clients all over the world. We have small business clients with revenue under 100 grand, small mom and pop shops, all the way up to 100+ million dollar revenue companies. We've got an office with 15 accountants in total, 5 CPAs. So we love what we do. Everyone has fun here. We love tax season, even though there's 20-hour days. But yeah, I mean, this is it. This is us. This is what we do. We love having you as a client, Eugene. You're one of my
Thank you,
favorites.
sir. Thank
And
you, sir. I challenge all. I bet no. So I walked into this. This is how it happens. Oleg and I have known each other for a really long time, and I was with a different accounting firm, but I wasn't fully happy and whatever. And so I sat with Oleg. I'm like, look, I don't know why it never happened, but why don't we work together? And so I'm like, look, I need an education on tax returns. Like, what do you mean? I'm like, let me come in for like 30 minutes to an hour. I'll bring food. Like, let's sit down. And I show up. He's like, all right, so what's up? And I open my tax return. I'm like, look, here's the deal. There's about 100 lines in these things, and I want to understand every line of it. And he looks at me, just goes, "Why?" I'm like, "I'm just weird like that." I just want to. So I'm like, I bet not one client has ever walked in and said, "I want to understand every line of." Matter of fact, pop quiz. I bet if we sent out a pop quiz to every person that watches this show, the 100,000 plus people that are gonna watch it, I give them like 5 questions. You can't Google. Just quick yes or no. Do you know what each one of these lines? I bet it's a failure rate of like ungodly
very small,
proportions. Like,
very
yeah.
few
So
clients do
so
that. That's
I
right.
challenge all. I'm like, what does this mean? What does that mean? And the truth is, the real test of knowledge is when you have to teach someone else. So when you got to teach an accounting layman like myself, whatever you learn, it's like it forces you to like think. In addition to being an OG, apparently you're also a hunk of an accountant, according to Rich Boy Doing Things.
That's
Hunky
right. And
OG
then he's a
accountant.
hunk of a lawyer too. So
As you guys can tell, Oleg and I never have any fun together. It's always suit and tie, very strict business meetings, very corporate, as you could tell. All right, cool. So, guys, look, here's the deal. Here's the deal. If you're anything like me, or excuse me, if you're anything like I used to be, you are a 1099 contractor, and it is, March or April, and tax season is due. And my life used to be, okay, cool. Well, I got to put taxes together. And so taxes are due March 15th or April 15th, depending on what kind of company you have. And 2 or 3 weeks before, it's a scramble to put things together. And then you meet with the accountant. And despite the fact that they're in accounting season, you're late. So you make your urgency, their urgency. And then they give you a tax bill. And that tax bill is shocking. It's like, what are these numbers? And you're like, hold on a minute. I don't have this money. I don't have this money. I might have made it before, but I don't have this money. And so that's what my life used to be like. It's very different today. We're really bummed up today, in part because of Oleg Self. And so I thought we'd have a quick podcast today on some of the best practices around accounting. So let's start with teaching folks from our playbook of mistakes, right? So
Yeah.
what you see, I love how you introduced yourself, because some firms are only about the bigger clients, some firms are only about the smaller clients, and it's rare to get someone that services both ends of the spectrum. So you kind of get to see everything. You have an aerial view, like I have in real estate. You have an aerial view in accounting. It's pretty cool.
Yep.
What are some of the biggest mistakes you see? What are some of the like
Yeah.
sports center not top 10? For folks to look out for.
Yeah, absolutely, absolutely. So, the biggest mistake I see clients make is not paying quarterly estimated
Mm-hmm.
tax payments. A lot of times people don't prepare for the tax bill at the end of the year. They don't make their quarterly payments. They're surprised, like you said earlier, they're surprised with this huge tax bill. And plus, on top of the tax bill, there's penalties, right? So the IRS requires you to make estimated tax payments every quarter throughout the year if you expect to owe more than $1,000 on your tax return, right? It's pretty easy to owe $1,000 or more, right? All you have to do is make a few $1,000s of income, and you'll owe 1,000. Therefore, you have to make quarterly estimated tax payments. So typically, your quarterlies are due every 3 months, and they're based on prior year tax, right? So
Mm.
whatever your prior year tax is, multiply that by 110%, and that is what your quarterly payments are going to be going forward.
And why 110%? Just 10% for like inflation, or because you think the business will do better, or why the 10% extra?
That's just the IRS rule. So the IRS
Mm.
rule is that you have to either pay 110% of prior year tax to avoid penalties, or 90% of current year tax to avoid penalties.
Okay, I
So a
see.
lot of
Very
self-employed
cool.
people don't know how much they're going to make. The goal is always to make more money.
Sure.
So 110% of prior year tax is much easier to estimate for a growing business than 90% of current year tax.
Very true. Very true.
And it's just a
Especially a
very,
business
very
that's
easy.
not cyclical. Yeah, for sure.
Yeah, it's super easy way to avoid penalties is just to make those payments. Penalties are no fun. Paying interest to the IRS is not fun either. So it's just a
Mm.
very easy way
Yeah.
to avoid that. The other
All right. So
thing,
so so, so hold on.
yeah,
Just quick. So to synthesize, I've made $100,000 in 2021. In 2022, I should plan to pay 110,000 in taxes. And at the end of March, at the end, whatever the 3 month period is, just cut a check for that amount. And it's okay, because if I made a lot more or I made a lot less, when the year is done, we're gonna reconcile it anyways, right? Is that about right?
exactly. That's
Cool.
exactly it. So if
Cool.
your tax bill ends up being a lot more, you won't be penalized. You'll pay the difference, but you won't have any penalties because you've made 110% of those payments. And if your tax bill happens to be less than what you've paid, you'll obviously receive a refund of the
And
overpayment.
woohoo, woohoo, right?
Exactly, and then you can celebrate you can go on vacation, you can buy a car, depending on the size of your refund, or you can just elect to roll forward your refund
Yeah.
to future estimated tax
Yeah, right.
payments,
Can you imagine?
with
Or
the less
don't
fun
waste the
option.
money and leave it there. Like, don't spend it.
Exactly.
Don't
Is
spend it.
the less fun option. People always say, I don't want to give the IRS interest-free loan, blah blah blah. At
Yeah,
the same time, if you don't,
yeah, yeah,
the penalty that they'll impose on you will be
yeah.
much higher than
You,
that
you know, you know what I
interest.
find funny? Those same people have no problem giving an interest-free loan to Mercedes or Rolex or Prada. Right?
Exactly, exactly. Or to their bank account. The money's sitting in your bank account
That's
doing
right.
nothing. It's the same
That's
thing.
right.
So
I actually just came back from I'm gonna do a 15 series, 5 to 15 series campaign on everything I've just learned. I just came back from Tony Robbins' financial seminar, and man, some brilliant people: Ray Dalio, Larry Summers, Paul Tudor Jones, Michael Smorch, Michael Saylor. I mean, the top guys in the financial world, and all of them had the same saying: in today's market with inflation where it is, cash is trash. So like, if
that's
you're
right.
keeping money in your
That's
checking
right.
or savings account, oh man, you're losing,
You're losing
depending
it
on
every
how
day.
you look at inflation, 7 to 15%, like every month essentially, pretty much.
Es-
All right, cool.
Especially
So
last year. Absolutely. Especially last year. Yeah.
yeah, all right. So quarterly, cool. Any other big mistakes you see? So quarterly, pay quarterlies, do get ahead of it. That's a really good one. I learned that the hard way. I just got sick of paying penalties, and I got sick of writing such a huge check at the end of the year each time.
It's
Now that I do
painful, man. It's
quarterlies,
painful.
it's
Yeah.
painful. Even if you have it, it's just, it like sucks, man.
Right.
No matter what income bracket you're in, it's always a big amount proportionally, right? Like, and so whether that check is 10 grand or 200 grand, any way you look at it, on a percentage basis, it always sucks. But
Yes.
now that
Yeah.
I'm doing it quarterly, it's like, actually last year, for the first time in my entire life, I got a refund, and I took Oleg's advice. I elected not to take it, but
And
to
rolled
roll
it
it
forward.
over. And
That's
guess
right.
what? Q1 came around, and I didn't have to pay much. I felt like I won the lottery. It was such a weird feeling, you know? So, all right,
That's
cool, my
awesome.
man. What else? What else? What
Yeah.
else
So
rookie mistakes you
another
see?
big mistake I see is companies six-figure revenue numbers over 250K generally not doing their bookkeeping, right?
Mm,
So a lot of self-employed people make a lot of money, sure, and then the year ends, and you ask them for their numbers, for their financial statements. How much did you make? What did you spend your money on? What's the bottom line? Like, well, let's calculate your tax. And
yeah.
they look at me like, what? What are you talking about? Do I just give you bank statements? I'm like, no, man, I don't want your bank statements. So it's a big mistake, right? Because now they
Yeah.
don't know how much they've made throughout the year. They don't know how much the tax bill is about to be.
Yeah.
They have to go sifting through 12 months worth of bank statements. They don't remember what the transactions are for, and they're
Yeah.
scrambling last minute to put the stuff together. And and then you'll end up missing
Yeah.
stuff that way, right? You miss a deduction here and there. You forget what you spend money
And of
on.
course, these people have all of their receipts, right?
Oh yeah, of course, everyone has all the receipts all the time. Sure. Oh
Yeah,
yeah.
man. I am embarrassed today to say that I was one of those people, and the health of the business was determined by the size of my checking account. Right? Like, oh, we're doing good. I got X amount of checking. We're doing fine. And then actually, Michael Rima, who's head of operations and marketing for the Litvak team, several years ago, he's like, dude, we are not doing good. And he introduced me to a document called a profit and loss statement. Now that I know it, it's like how you shouldn't be allowed to, like, when you go to file for a tax ID number, there should be a test. Show me your ability to create a chart of accounts. Show me your ability to read a P&L. Show me your ability to analyze a cash flow statement. Oh, you
That's
can?
right.
Cool, beat
That's
it,
right.
bro. Like, beat it, like,
That's
yeah, but
right.
I too is one of those folks. And so, yeah, I cannot second that enough. Now we have a real tight bookkeeping operation. I'm the CEO, in brokerage. Can you see I'm the founder of my team? I'm the CEO of the Litvak Group with the company that's
Yep.
incorporated. And we have contractors, we have people. I have a great and very capable staff. However, and some CEOs might disagree with this. However, I literally review my own bookkeeping. It allows me to keep a grip on the business. It allows me to, if we're overspending, dial it back quite quickly. Because if you're looking at that bookkeeping, once a quarter or twice a year, for anybody that's growing a business, it's very easy for expenses to totally spiral out of control. And I
Yep.
always heard about this phenomenon of, growing the business while disintegrating the bottom line, right? You grow the business, you make more money on the top line, but you actually make less profit. I'm like, those people are stupid. How could you do that? Guilty. Learn the hard way. Learn the hard way.
Yeah.
Wasn't watching the bookkeeping. Just kept spending money. And then like, oh, wait a minute, that's not how that works. So, yeah, man, I double down on all that, man. Double down on
Yeah.
all that.
And may
Um,
I add that your particular bookkeeping, your P&L, and the way you break it down, I saw you have your own specific
yeah,
P&L. You add
yeah,
a lot of items on there that are not
yeah,
standard, but they do definitely give you a much deeper view into your business and how you're doing.
yeah. Thank
So I
you,
think
thank
you
you.
should share that with the world.
Yeah, I'd be happy to. Actually, I thought about that. I thought about holding like a training for like just very simple, like, hey man, here's how you create a chart of account. It's a really cool skill I learned because now I feel like I could walk into any business and just by analyzing their chart of accounts, probably help them trim some fat. Because the truth is, most CEOs, especially in a healthy company, if you've got good margins, they're just not almost always when I coach businesses or people and I ask, what are your goals? It's always some top line goal. We want to raise revenue to this. We want to make more deals. We want to whatever. And it's like, who cares about the top line? The only line that matters is the bottom line. You'd rather do more bottom line and less top line, but it's just no one's teaching this stuff. Like I've had the fortune from learning from, folks like Tony Robbins and more
Hmm.
specifically Keith Cunningham around this area because, there was a point in the business many years ago where the business got kind of into danger because I wasn't doing this work. And man, I went on a deep dive. There's no shortcut, 100 hours of like P&L, cash flow, yada, yada.
Yeah.
But you know what? When COVID came around, in under 90 minutes, I was able to download my P&L, add starting and ending cash, run 4 different models of, if things got bad, which levers we pull, where we cut back. And man, I was able to drive. It's like being in the cockpit. I have all my dials, all my
Yep.
levers. versus
Yep.
flying blind. You know, like that's, I mean, you don't want to be the Titanic, right? Like, I guess that's not flying, but all right, talk to me about write-offs, bro. So there's gonna be some people that watch this that are in fact W-2. And so some of this won't be relevant, right? They probably don't need to do bookkeeping. They probably don't need to file quarterly. I mean, again,
Yep.
if you're watching this in your W-2, still be on time, get your tax returns done on time. But like we'll talk about preparation for returns
Yeah.
next. But the first segment is, you know, sort of more for independent contractors because that's where people really get in trouble. There's this thing, write-offs. Everyone talks about write-offs. Actually, for those people that watch Schitt's Creek, which I think is one of the best shows ever, there's a bunch of really funny scenes there as David opens a
All
business
right.
about write-offs. But talk to us about write-offs. What is a write-off?
Yeah.
And, you know, any suggestions around it? Just talk to us about write-offs.
Yeah. So I mean, you know, a write-off is just an expense that's or an item, I should say, a financial transaction that is subtracted from your taxable income. So as a result, it lowers the amount of tax that you pay on what you've made. So the best way for self-employed people, S corps, C corps, you know, 1099 contractors, the best way for them to think about write-offs is before you spend any dollar, you think to yourself, is me spending this dollar a requirement to run my business? Do I have to spend this to run my business? Is this going to make my business better? Right? Or is this just a personal expenditure that I'm making? Right? If the answer to the first question is yes, then that is going to be a write-off. You're going to be able to deduct it against your taxable income, and therefore you'll pay less tax.
There you go.
If you're spending $100 on something that's you know that's business related, and you're in the 30% tax bracket, let's say, right, you just got a 30% discount on that item. So you bought something
Right.
for $100. It actually cost you 70 because you were able to deduct it from your taxable income, contrary to what they say in Schitt's Creek, that you just take it off your tax bill. You don't take it off your tax bill. You deduct it from your
Yo,
taxable income.
so funny. It's so good. Guys, please Google this episode. Like, if you didn't watch the whole show, just take it off your
The
income, right?
write-off
It's
people.
so good.
Yeah.
It's
The
so
write-off
good.
people get it.
You're right to write off people. That's right. So good. So good. All right, cool.
Yeah.
And by the way, let me just add, as the entrepreneur, if the answer to that second question is yes, meaning it's for personal expense, off the record, nobody's watching this, find a way to make it work for the business. Find a way
Right.
to answer that first question, yes, as much as possible, right? Just don't cheat on your taxes. I'm not saying that. Don't go and break the law, but just think about the way you're spending money and how can you spend your money in a way where you're feeding the business more often than not, right? Just look for ways to do that. And okay, let me synthesize and explain for those people that might not be as savvy with write-offs. So essentially, if you're a 1099, that means taxes aren't getting collected from you regularly. And when you pay taxes, you have something called top line or revenue. Then you have a whole series of expenses. And then you have something called bottom line or net profit. So if I make $100 and I've spent $50, I got $50 left. Top line is 100, expenses are 50, bottom line or net profit is 50. Your tax bracket is not on the top line, but the bottom line. And so
Correct.
every single time you spend money for the business, an expense, those are essentially called write-offs. And so you want to maximize your write-offs, especially in things that actually can help the business grow, because the reality is if you're not spending that money, you're going to have a larger net profit, which is good, but you're also in a higher tax bracket. And so you're kind of wasting the money. So think of it like, look, the government wants you to succeed, right? Think of the government as a partner in this way, in that every time you go and spend $1 on the business, the government is contributing and helping you with a third, a quarter, a fourth, you know, whatever your tax bracket is. The government's contributing and saying, we want you to spend money. We want you to grow your business. We want your bottom line to be better. So, you know, write-offs are great. Just be careful not to fall into the pitfall of, you know, the way that some folks are like, oh, of course I bought it. It's on sale. Not everything. Don't treat it's a write-off like it's on sale, right? Just be diligent and be thorough. Be intelligent about how you're spending money towards the business. You know, like if you're gonna fly to Tulum for a trip, and you're like, oh, of course I'm gonna fly business because it's a write-off. You know, it is a write-off, but that's
Doesn't
not
make it
feeding.
free.
Yeah, that's right. That's not feeding the business any, and that, you know, 7,000, whatever it is, isn't free, right? It's like, so just be careful. Oh, like any tips around write-offs? Something you see people do really well,
Yeah.
any misconceptions, something people do poorly, anything in that space.
Yeah, so absolutely. If you're planning a trip to Tulum, just make sure there's a real estate conference there whenever you go. This way, you can
I
claim
have
that
no
the
idea what you're
trip
talking about.
that the whole trip is for business. Other than that, I mean, the IRS requires you to keep all your receipts. A transaction on a credit card does not qualify as a receipt unless it's extremely clear what it's for, like a Home Depot, transaction on your credit card. You can argue that that's for a repair or home renovation or whatever. But if that's all you have is just line items in your credit card statement or your bank statement, that's not going to fly for the IRS. They
All right,
want
so
to see
I have a
actual
question here.
receipts.
I
Yeah.
actually have a question here because that's news to me too. Gulp. That's news to me too. So I'm just joking, but so essentially this part, this is one I feel like a lot of people do have a misconception on. Theoretically, doesn't the line item on the credit card count as a receipt? You're saying no. So I'm,
No.
I'm running a business. Let's say I'm not in the real estate business. I'm in any kind of business. Doesn't really matter. I mean, and I do 3, 4, 500 transactions per month, right? I buy
Yeah.
pencils for the office. I buy lunch for the office. I buy a new piece of furniture for the office. Am I really expected to keep 400 to 500 receipts per month? Like every single thing, I'm supposed to keep a receipt?
Short answer is yes. However, most of the
Wow,
items you described are kind of recurring expenses, and most of them are purchased online. So
that's right.
you'll likely get an email confirmation when
Right.
you make the purchase. So you actually do have all of your receipts in your email.
Cool. Exactly.
Just a matter of organizing them, maybe once a month or once a quarter. Just sit down, spend an hour, spend 30 minutes,
Yeah.
organize everything, save it all down to a hard drive, to Google Drive, whatever it is, just in case. Chances are you'll never need it. But if you do need it,
Yeah,
it'll
you
be a
want to be
savior.
ready. You know, the
You
one
won't
thing that I
regret it.
find all the
Exactly.
time, that's right. The one thing I find happens all the time is like people ask me a lot. So I've spent a lot of time studying, tax law and financial law, like all that stuff. Cause I feel in order to be a good entrepreneur, you have to know this part of your game. Accounting is the language of business. And if you don't understand it, you can't really play the game at a high level.
That's right.
And
Yeah.
people are always coming to me like, yeah, you could write that up. Can you write this up? And I'm like, look, this is my answer to always. You can do whatever you want to do. Just when there's a knock on the door, you got to be confident that you can defend your reasoning. That's also, can you write this up? Sure. But if there's a knock on the door, from the IRS, you just got to make sure that the reason
You got
you're
to be
writing
able
it
to
off
prove
will
it.
make sense to
Yeah.
the IRS. That's it. That's the answer. Because you can do whatever
Right.
you want until there's a knock on the door, right? Like, I
Exactly.
mean, all right, cool, my man. So we're almost out of time. I want to be really respectful of your time. So taxes for folks that have an S corp are doing just a few days. Taxes for folks that have a C corp are doing just about a month. And then I think personal taxes are due April 15th as well, if I recall correctly,
That's
right?
right. Yep.
So taxes are due in the next 35 days for the whole world, for everybody. How do you, as a personal, someone that files a personal return or a business return of any kind, just tips on best way to prepare? When should you start preparing? And then if you are in fact late, like some folks that are watching the show, reminder, if you got an S
Right.
corp, gulp, right? Like, and so if those folks that choose to file an extension, so just give us that whole thing in one blurb, right? Best way to prepare, and if you are late, what's
Yeah.
the course of action you should take?
Yeah. So there's 4 days left for S corps and partnership returns. At this point, our firm specifically, and I'm sure many other accounting firms, are not going to prepare a return that's due in 4 days. So you should probably go on extension. The extension
Right.
gives you an additional 6 months to file your return. A very common misconception that an extension increases the likelihood of an audit. It does not. There's no such statistic. It does not increase your likelihood of an audit. I personally, both my firm and my personal return, I file an extension for myself every year, only because I want more time to analyze my numbers before I file them.
Same.
Yeah,
Any
and
fees with an extension, or interest or penalties,
so
or
you do have to pay your tax with the extension. The extension is an extension of time to file your return. It is not an extension of time to pay your tax. So
right?
it's very important that if you do go on extension, you make an estimated tax payment.
Which you
Um,
should have been doing
which you should
every
have been
quarter
doing anyway.
anyways.
Exactly.
So by now you should have not. You should only be paying Q1 of this year, right? Like you shouldn't be worried about last year anymore if you were doing your homework, right?
Exactly. If you made the
Like
first 4 payments, then this extension is not a scary thing for you at all. That's
that's right.
exactly it.
That's right.
Yeah. And yeah,
So
I
if
mean
any
that's
penalties, any fees, any is there a penalty or a fee to file with an extension?
there's no penalty, there's no fee to file extensions.
Right,
As long as your tax is paid up, you're
right,
fine. You know,
right.
6 months later, you'll file the actual return.
Yeah,
And
yeah,
in a perfect world, you'll have no balance due and no refund, and maybe a small
exactly.
refund because you've overpaid. And if
Exactly.
that happens, then there's no risk, no penalty, no
Yeah.
interest, nothing.
So my fellow brothers and sisters in the entrepreneur world, hear us. Okay, hear us. Doesn't matter what you did yesterday. Pay your taxes quarterly. When it comes to March, chances are maybe you didn't get every K1 yet. Maybe you're busy in the business. Maybe you didn't get. So just there's nothing wrong. I too tend to file the extension. If nothing else, I know that in March and April, my accountant's going to be slammed. And if I want time to go through the numbers, like I know he's going to be busy. And so if nothing else than that, I don't have to worry about paying any more monies because I've been paying quarterly. I file this extension. I let my accountant do his thing. I have more time to review my numbers. And then around, May, we'll grab lunch. We'll look at the numbers. I've looked at the numbers. He's looked at the numbers. Look, you want checks and balances in your life. And so, an
Right.
accountant's responsibility is not to tell you you're financially healthy or not, but they are checks and balance for you've done your numbers correctly, right? You have capitalized on your write-offs, or this write-off you maybe don't want to use because they come knocking, you're not gonna have an answer or whatever. And so if you just stay ahead of it, look, there's no one that I've ever met in the history of the world, myself included, and I am a data nerd, that loves accounting, with the exception of maybe the accountants, and I'm not even sure they love it. So, but
We all love it.
this is this is a necessary part of the business. Find a way to be excited about this part of the business, and I can tell you from personal experience that when it comes time for March, and you have to set an extension, and you don't have to worry about sending any more money, except for in a week or 2 weeks sending Q1 for this year, the whole thing gets less stressful. It's just a lot less stressful. So, Oleg, what a brilliant show, man. I think this is really timely. I'm glad we squeezed it in to make sure to get to everybody in advance. This is going to go out on Tuesday to, over 100,000 people. Any final tips for folks? And if people want to work with your firm, which, by the way, 2 thumbs up, highly, highly recommend. Any final tips, and how do people find you?
Yeah, absolutely. Thanks for having me, Eugene. I appreciate it very much. Look forward to coming back whenever you'll have me back again. But
probably this time next year.
Probably this time next year, exactly. But everyone should file their extensions. They're doing 4 days for companies, and they're doing about 38 days for individuals to get your extensions in to avoid penalties. To find our firm, just go on our website, www.ogcpafirm.com. That's how you get in touch with us. There's a contact us button. Send us an email, call us, set up an appointment. Happy to meet with anyone and talk through your financial situation and get you all set for tax season.
Amazing. I still, my vote for coolest company name in the registry of companies is OGCPA. Like, are you kidding me? And it's not a farce. His name is Oleg Gorshkov.
It's just my initials.
It's just his initials.
Right.
It is brilliant. My man, Oleg. Well, I'll be seeing you soon. I'll be seeing you in about 2 months about my stuff. So go ahead and finish up with everybody else, and let me know when we're sitting down about my stuff. Thank you so much for your wisdom. And again, my whole team and all the folks that I recommended to you and my family, we all thank you for the great work you do for us. We love how you enroll Uncle Sam in our business as much as humanly possible. And Uncle Sam, we thank you as well. We know you're doing important work out there. We love you. We're all good to pay our taxes. Just let us keep some of our money. Let us keep some of it. I got kids, man. They're expensive. Oh, thanks so much for your time today, man.
You got it. Thank you so much, Eugene. Thanks for having me.
Take care.
Bye,
everybody.
guys. Bye, everyone.
Have a great weekend, everyone.
Bye.